Hello, everybody. I'm John Locke, and I'd like to welcome you to the LockeInYourSuccess.com Trading Performance Podcast, where it's all about real traders, real problems, and real coaching. Listen up and enjoy the segment. I just want to talk about the membership a little bit because we do have some newer members on. Our intent here on Options Trading for Income is to take a look at a variety of different types of option strategies. They have different entry configurations. They have different exit configurations, of different adjustment techniques. We do not look, or put it this way, it's generally not going to be beneficial for most people to look at the process as I'm going to find a trade, and that trade is essentially going to win all the time, and I'm going to make money consistently if I just follow the trade rules. That is it's an unrealistic expectation. Now, the question is, if I have a good trading strategy, can I make money over a long period of time? And the answer is yes. We've proven that over and over again. Like, you can take an M3 or an M3.4U. You could have traded it for the last 20 years, and you could have done very well over that period of time as a return on your account. Are those returns going to happen consistently? Well, first of all, consistently, what's your definition of consistently? For some people, it means winning every trade. Some people mean winning every month, which in a lot of these cases here would be every trade. Some people every quarter, every year, sometimes every 10 years. And the answer is, if your definition of consistency is win every trade or win every year, the answer is no. The reality is regardless of what your trade rules are, regardless of how well they back tested, there are times when your trade rules are going to be, the market's going to be accommodating to your trade rules. There's times when the market is not going to be accommodating to your trade rules, and therefore you're not going to win all the time, right? You're not going to win every trade. You're not going to necessarily win every year. And you're going to have experienced variable results. If you're completely non-subjective as to what the market does, which is what we're doing here, right? So we're non-subjective as to what the market does. We don't care if the price is up or down. We don't care we don't have any technical opinion. We have a certain set of rules, whether it be a date or whatever. We're putting it on according to the rules, and then we're taking it off. We're adjusting it according to the rules. We're taking it off according to the rules. Why do we do this? Well, a primary purpose for you doing this should be to understand your positioning. If you're going to trade options, you need to understand options. A lot of people understand trade rules, right? And I'll have this to me all the time. I understand the M3. Really? You might understand when to enter it. You might understand the configuration to enter it. You might understand the adjustment techniques when we hit certain delta numbers and when to adjust it, and the exit technique. You might understand the technique behind it, but you don't understand the strategy. You don't understand what dynamics it takes for the strategy to win our maximum amount. You don't understand the volatility dynamics that have to happen in order for it to lose, right? You understand the rules, but you don't understand the position. Our intent here is to get you to understand the position. There's a very, very large difference. Understanding the rules, anybody can do. Doesn't take any talent. This takes a little bit of work to understand the rules. But understanding the way the position reacts takes paying attention to different things other than your profit and loss and whether the trade won or not in backtest rate. And I've said this time and time again, we should enter the trade today. And I should be able to tell you, if the price does this over the next week, and then that, and then this, and then the other thing, what is your profit and loss going to be? What's your delta going to be? What are your vulnerabilities going to be? What are your advantages going to be? You should be able to answer those types of questions. If you can't answer that question, then you don't understand the strategy, right? What's the benefit of entering our bull trade at 30 delta versus our super bull trade entering it actually above the money? What's the benefits of that? What's the drawbacks of that? What capital configuration and what type of capital levels? How do you have to change your capital levels based on the way you're entering the trade and the trade rules within the strategy? So these types of things are the things that are actually going to help you with trading. Knowing the rules, that's great, But it's not as important as understanding what the rules are telling you and what advantages and vulnerabilities those rules are giving you, right? So to understand that, we trade them non-subjectively. We trade them the same way through all different types of market conditions, all different price movement cycles, different types of implied volatility environments and implied volatility shifts. That is what's going to give you the understanding you need to know so that you can then apply technicals to that and then really hit it out of the park and gain your consistency. That's where you gain your consistency, is understanding what the strategy is doing, understanding the environment that you're putting the strategy into, and understanding what you should be modifying when certain types of things happen. This is where you're going to make as a trader. It's not going to be, oh, this trade, I tried it, it didn't work. I'm just going to go and try another trade now and learn another set of trade rules. That is not going to benefit you. Benefiting you is understanding what's going on under the curtain. So you want to tamper your expectations to say, I can trade this way if I want. Like I said, I can make money over time, so long as a couple of things happen, right? So long as I maintain my position size. So this type of trading, it's extremely important that you maintain your position size. If you're going to trade non-subjectively over a long period of time, you have to maintain position size. If you're increasing your position size because of P&L over the last 3 or 4 or 5 trades, and you're decreasing it because of P&L on the last 4 or 5 trades, then what you're essentially doing is your confidence levels varying based off of a P&L number, which is highly dependent on luck and how your strategy happens to match the marketplace. When you do that, you put yourself into a cycle where you're trading small during your winning cycles, you're trading large when the losing cycle comes along. And even though your percentage on your trade size worked out, your overall profit's going to be down because you're losing on your big trades and you're winning on your small trades. Okay. Now, I'm not saying it's not okay to vary your capital size. Varying your capital size, we're going to want to do that. We're going to want to increase size at times, and we're going to want to decrease size at times. But we do not want to do it based off of what the profit and loss of the last couple of trades are. That has no relevance as to what the next trade is going to do. Okay. Also, you have no business basing your confidence off of your P&L of your last couple of trades, because when you do that, you're setting yourself up to just not make money in this business. You want to base your confidence level off of what your probabilities are at the time, given the trading strategy and how it relates to the marketplace. You want to base your position size off how well you're following your guidelines and stuff. In other words, am I trading well or am I trading poorly? Because we can have mental breakdowns where we trade poorly, which case, because we're having a mental breakdown, we want to not be in the market or change our position size. That doesn't necessarily have anything to do with your P&L. You could have a spectacular P&L in your last trade, but you could have gone back and done your trade debrief, and you could have said, well, yeah, I made a lot of money, but it was luck, and I risked, I was risking blowing up in order to make this trade win. I'm trading poorly. I should stop trading right now until I reset, or I should drop my trading size until I can trade more responsibly, right? Or you could have this loss that was twice your normal loss, but you go back and you review the trade and you said, well, I followed my probabilities, I followed my game plan. Just happened, I had a little bit of extra luck. I don't want to, or a little bit of bad luck, or my strategy happened not to match the marketplace. But other than that, I traded really well. You don't want to drop your size because you've lost. That's not where your confidence should be based off of. If you base your confidence off the P&L of the last several trades, you are not going to make money in this business. It's just not going to happen. So you want to keep that in mind. But these are the lessons that we're doing here. We're looking at these. Whether they make money or lose money is sort of irrelevant, but understanding why they made money or lost money is very important. And again, it doesn't necessarily have to do with the trade. It doesn't necessarily have to do with if you're in a bullish or bearish market. It has to do with a lot of different dynamics, and you want to be aware of what those dynamics are.
And that is what I have for you today. If you have any questions or comments or anything else you'd like to see in the next Trading Performance podcast, please list that in the comments, and I'll personally answer your questions and comments for you. Also, I'd love to encourage you to come on over to lockinyoursuccess.com. That's LOCKE in yoursuccess.com, and check out our Trading Performance and Pro memberships, where you can find the tools you need to become a much more effective trader, regardless of the type of trading you do. Thank you for joining me. I look forward to seeing you on the next Trading Performance podcast.